Governor of California Gavin Newsom signed 40 bills into law on Wednesday, all aimed to increase housing in California. One of these bills will allow for unused commercial properties to be used for residential units for lower and middle income families without rezoning. This will create an estimated 2,755 new units of housing. Another bill that was signed was to give tax breaks for developers who want to build more affordable housing near public transportation. In other news, following the recent federal funds rate hike by 75 basis points, the stock market sell-off continues, and stock market losses are wiping out value from fellow Americans. Despite the Fed's effort to fight inflation, some say it is here to stay.
I'm not leaving. I'm not leaving.
Hey, what's going on, guys? It's Makita here bringing you another video today. In today's video, we'll cover some of the recent bills signed by Governor Newsom on Wednesday, the recent impacts on the economy following the recent rate hikes. If you're tired of paying $100 to fill up at the gas station and want inflation to come down, make sure you hit that like and subscribe button. It might not have any effect on what you pay at the gas station, but you'll be happier knowing that you like this video. Stay tuned and let's get right into it. So first off, with some of the local news. Well, local for us. For those that don't know, we are based and operate out of Sacramento, California. Among the many bills signed on Wednesday, the two we'll go over are both related to the housing sector in California. They are SB 6 and AB 2011. They are aiming to help create much needed housing units for lower and middle income residents of California by allowing residential units to be built in unused commercial sites that are zoned for stores, offices, and or parking. This solves the issue of there not being enough land to build units for residential use. The Department of Housing and Community Development has awarded $1 billion in funding for the second round of California's ambitious housing accelerator, which will provide 30 shovel-ready projects with tax credits they haven't been able to obtain so far. As a result of this, it will create more jobs and increase the use of public transport by building these units near existing transit. In 2021, Gavin Newsom signed the $100 billion California Comeback Plan to accelerate the state's recovery and tackle persistent challenges, $10.3 billion of which was allocated towards affordable housing production and homeownership opportunities, with this year's budget investing an additional $3.3 billion. Senator Ana M. Caballero said the Middle Class Housing Act, or SB 6, can result in the construction of at least 2 million housing units and is one solution to build up and avoid sprawl. Given the fact that California has one of the lowest homeownership rates, maybe this will make a dent and allow people to finally be able to purchase a home here. What do you think of these new laws? Will they help increase housing in California, or will it just create more problems? Let us know in the comments. Now, it's been about a week since the Federal Reserve decided to increase the Fed funds rate by 75 basis points, or 0.75%. This was done in the name of the ongoing fight against inflation, which has been on the rise for a while now and has reached the highest rate in 40 years. Although the Federal Reserve does not control the mortgage rates directly, mortgage rates have been on the rise since the announcement of rate hikes. As of September 29th, the mortgage rates are closing in at 7%, hitting levels not seen since 2007. According to data released by Freddie Mac, the 30-year fixed rate is averaging around 6.7%. Keep in mind, a year ago it was 3.01%. For the 15-year mortgage, it also went up to averaging around 5.96%. Historically looking, this still isn't as high as to what they were in the 80s, when the average rate was hovering around 18%. However, this is still bad news for prospective buyers and sellers, because for anyone who wants to purchase a home now, their monthly payment will be hundreds of dollars higher than it would have been 6 months to a year ago. Homeowners' desire to sell their property will also fall because they wouldn't want to trade in their lower rate for today's higher rates. There's a lot of pressure on the housing market from all sides, and something has to give in. More than likely, that will be the prices of the homes. The median price of an existing home in August was $389,000 compared to $403,800 in the previous month. Inventory is already sitting on the market a lot longer than it was a year ago. However, it still doesn't hurt to shop around for a better rate. A survey done by Freddie Mac revealed that there is a dispersion of rates from different lenders. Refinancing has obviously declined and is at a 22-year low because there aren't many people who can benefit from today's rate. Applications to finance a home declined 11% for the week and are 84% lower than they were the same week a year ago. Mortgage applications to purchase a home decreased by 0.4% for the week and were 29% lower than the same week a year ago. Now, adjustable rate mortgages are starting to get more attention because they offer lower rates and can be fixed for up to 10 years. The Fed isn't done raising rates for the year either.
Are you not happy, or you're only half happy, or
Still to be happy about.
you're up 2-0?
Job's not finished. Job finished? I don't think so.
Okay.
It will be interesting to see what the housing market will look like in the fourth quarter. Following the recent rate hikes, the stock market has been on a continuous downtrend this week. The 2022 sell-off continues. As of this video, the Dow Jones Index plummeted 440 points, roughly down 1.5%. The S&P closed at 80 points down, roughly 2%, and the Nasdaq closed down over 300 points, roughly 3%. Apple is leading the sell-off in the broad market after Bank of America downgraded the stock from buy to neutral and cut its price target from $185 per share to $160. This downgrade came following the news that Apple was pulling back on production of the iPhone 14 after failing to see highly anticipated demand. Apparently, Apple had told suppliers to abandon plans to ramp up production, aiming to produce 90 million units instead of the initial 96 million units. However, the demand for the new iPhone 14 is still higher than other phones. That's gonna wrap it up for this video. I enjoyed making this one, and if you made it to the end, I hope you enjoyed watching it. If you feel like you were able to get some value from this, please don't forget to drop a like and subscribe. I'll see you on the next one. Take care and stay informed.